All right. Hello, everybody. Welcome back to another Palantir earnings stream. We get 4 of these a year, and this is the first one for 2026, Q1 2026. This is going to be a big one. It's going to be important. There are so many different narratives and headlines that are surrounding Palantir going into the print. That we are all going to get to talk about over the next hour. And hopefully we get the numbers that not only produce the results that the company wants to see, but obviously produce results that gets the market to be more excited. 146.63 are up 1.77%. I will have Amir and Arnie joining me in just a couple of minutes. They're both just getting set up right now. And we're going to be able to get into all of our analysis. Chad says, did you dress up today? Yes, Chad. Dressed up a bit today here. This will be an important one. This is going to be a big one. Majority of coverage today obviously is going to be on Palantir. I think there's a couple other companies that are reporting earnings right after the bell, but this is going to be a big one that not only all of us as shareholders likely care about, people that have been following the company, but quite frankly, given the narrative around software, Palantir still down about 20% year to date. IGV down about 20%. Salesforce, Adobe, ServiceNow, all of the software names have been hit with this narrative that in the age of AI, they are not going to be able to grow. And the question of the terminal value of software is starting to come to fruition. The thing that I think the market is going to care about today, in particular for Palantir, the market has always cared about Palantir as the company has started to grow over the past couple of years, but really now Palantir is one of a handful of companies that is able to actually grow revenues above 50% and has, basically the best operating margins inside the entire software stack. So if Palantir is able to give us one of those quarters again, which basically for the past year and a half, they've just been giving unbelievably strong quarters, the street expecting 28 cents a share and $1.54 billion of revenue. If Palantir is able to do it again, then I think this is a quarter that's going to be interpreted positively because the other software companies, unfortunately, just haven't been able to live up to the expectations and give these massive quarters. Or if they have given a good quarter, it hasn't been one of those blowout quarters. And I think in the software space, you need one of those companies that's able to do that. Obviously, Alex Karp would describe Palantir more as AI infrastructure that's necessary in order to make AI even work, not just pure software. And hopefully that's what we're going to see in the results. The 1.54 billion would be 74% year-over-year growth. That's basically what Palantir guided. That's basically what the analysts are expecting. I think people have higher expectations, and obviously if Palantir is able to really deliver on higher expectations, dare I say 85% growth, which would be around $1.67 billion, then, obviously I think the street would be quite excited about that. Let's get someone onto the show who is an OG of the Palantir community, the early days, 2021, 2022, analyzing, trying to understand this company and trying to make sense of it for everyone in the world to hopefully understand as well. Ladies and gentlemen, it's been about 3 months, but we have Mr. Arnaldo.
It has been 3 months, but here we are.
Here we are. Is that the Palantir? No, that's not the new one that Iliano launched, right?
It is.
It is. Wow. I like it.
It gives me a little bit of secretive detective right now.
How have you been, man? How's life been the past 3 months?
I would say pretty good. Like there are ups and downs, as everything, but once you start dominating, you need to dominate. No.
100%. Once you start dominating, you need to keep dominating. So, let's get right into it, Arnie. People haven't heard from you for a couple months. I'll pull up your tweet. You have been tweeting about some of your thoughts on Palantir. The Q1 deal activity was pretty incredible. Obviously, I think that's leading to a lot of people feeling that the momentum in the business will be pretty incredible as well. What do you think we're going to put up in terms of these results? And do you think we get that 80% level of growth that people are expecting?
As usual, I tend not to overthink too much of the financial numbers until we are really close, and because it's good to start reasoning in terms of results once you have a full overview of the deals, emerging deals, and so on. And again, today was, okay, let's try to have a sense again to what are the guidance, what is the actual guidance that the company issued last quarter. And the 1.5 billion guided, how much growth rate is already?
Yeah, 74.
74. Okay. when a company issues a 74 guidance in the normal history, like you have companies like ServiceNow issuing guidance still in the 20 something, and Palantir just doesn't give a like they keep increasing speed, and now they're raising guidance at 74%. And typically, and they tend to smash this guidance. Like last quarter, they smashed the guidance by like 13%, 10%, 10% again. So completely destroying even the expectations of of the guidance. So it's hard to say a precise number, but I struggle to think that a company like this would not give a guidance that high if they are already not confident into smashing it. And with smashing it, I think at least 1.6 billion of revenue for the quarter would be booked, and more than 900 million of EBIT adjusted. Essentially, I expect at least 80%. I don't say that number just to drop drop a number, but look at the deals that you mentioned before. Like this quarter, Maven has been considered a system of record for the DoD. That alone opens up a complete new world for Palantir's government. And we are already starting seeing, like, as the quarter ended, Maven got expanded in Czech Republic. Then, fresh off last week, Palantir got involved for a reconstruction of Ukraine. So all pieces of the government that we have been seeing for years now are really growing up. And this doesn't stop to defense. We saw 1 billion with the Department of Homeland Security, a new deal for agriculture, and of the government on the commercial side. I don't know even where to start with deals. We have smaller deals, but then we have huge deals like Arbus expanding Skywise for 10 years potentially. So
do you think there is more pressure on Palantir, not just because they have to put up good numbers, but for the whole software sector to be seen as a beneficiary of AI?
I think there is obviously a feedback loop narrative, in the sense that when you are perceived as successful, people are more likely to come to you. And this is worth for anything in life. But when it comes to having a very strong reputation for having success in enterprise, since it is both lots of word of mouth involved, and we are talking about a product that, thanks to that word of mouth, is discovered, thanks to all the branding, positive and negative, people somehow know about it. The real reaction is when people see the software, they are staggered. And this software works. Now, it's not even a point. Like, we have seen it so many times in the most critical use cases. So Palantir being perceived as successful really helps the story. And to contribute to this, we have been seeing CEOs again sharing compliments to Palantir. Now, have you seen what Chad shared last week
with the AIG?
Yes. So
I
have the tweet exactly here.
Yeah, I can read the quote, actually. Oh, you have it loaded up. Okay, perfect. Go ahead. Yeah, I'll read it. Using Palantir's Foundry platform, we expanded our ontology, a digital map of our business that included our underwriting processes, workflows, and data relationships. This ontology, coupled with orchestration, will enable us to deploy multiple AI agent teams to integrate with our core systems, which will improve decision-making and reduce costs over time.
So I believe what Chad shared here is so true. Like, you can't compete really with a company where you have top CEOs, huge companies, essentially saying, look, we couldn't have done this without the help of Palantir. So far, we have been seeing CEOs saying, oh, we are implementing workflows and stuff, but hardly you see a real output being done, except from these CEOs essentially bragging for being associated to Palantir. And Compass Health, very similar thing. So hard to not be bullish in this case.
Yeah, it's a fair point. And, a lot of us have talked about valuation as well over the coming months or over the past couple months. And obviously Palantir has a premium valuation. I think given the sort of depth of SaaS, we've seen why they get a premium valuation. And if they continue to put up the type of growth that they're putting up, proving that they are AI infrastructure, not just, software as a service, it's probably why the street continues to give
Wait
them
a second. You mentioned premium valuation. Expand that premium valuation, please.
Yeah, well, people will say, they traded 200 times forward earnings, traded 70 times sales. I think kind of the core argument that a lot of us have been saying, if they continue those growth rates, that's where they continue to grow into that valuation.
Okay, but do you still think this is a premium valuation?
Yeah, I think, well, compared to the other software companies, yes. Compared to the growth they can get, that's up to them to see if they can keep beating and raising.
Because I was trying to scratch my mind into this. Like, in hindsight, we can say, okay, if something essentially gets smashed almost 50%, maybe the valuation was a bit stretched. Now,
right.
It's not something really new. Like, even when we were in October or November, we were close to 200. We crossed 200 for a little moment pre-market, backed by astonishing financial results. We agreed that, it's hard to really think that at this price is cheap. But now we are already after 2-3 quarters of exceptional growth, margins that go to the moon. So isn't it that we are still stuck to the idea that Palantir is expensive because we have been conditioned for thinking, oh, Palantir is really expensive already for more than a year and a half?
Yeah.
Because now you are absolutely true in saying that Palantir trades at a premium valuation against other companies, right? But are the other companies really comparable to Palantir?
That's a great point.
No,
it's a very great point. Arnie, let me just get into the bell, and then we will keep up with your analysis, folks. Here we go. We got 10 seconds. Lots of earnings on deck. We should get Palantir's result in a couple minutes after the bell, and then we will see where this goes for today. May the 4th be with us all. Monday, May 4th. The stock market is now closed.
Amit, I have to tell you something.
Yes.
So the other day, I was in Monaco at a conference. At a certain point, a guy tells me, come, as well as he told me that he secretly loves your bell because like he couldn't make his days without your bell. And I had to confess, look, when Amit told me that he wanted to do a daily stream, I was like, come on, like it's too much information. Like I would be overblown. But then I have to confess to you, like even if I don't comment, I'm always there. At like at my 3:29, I tend to join your stream. I need that bell now.
I love that he had to say it to you in secret because he couldn't admit it. I love it. That's awesome. Amir, thank you for joining us as well. How are you doing? And we can't hear you. You are muted, I think. I think you muted the bell.
Too much on the other side of the world now.
Guys, the earnings are not out yet. Probably a couple minutes. We will get these numbers. And then we'll keep going. We still
okay, so before we see some wild movements up and down, what's your personal guess, like on the reaction? Just the reaction.
Well, the implied move is 164, 162-ish to 130. That's the range. Look, I think they're going to beat the expectations pretty heavily. And I think if the street thinks that beating expectations matters in a world in which the expectations are already so high, then I think we get a pump. But the question is going to be how well is the beat for that to really go through.
I mean, can we say we are done? Like, we can't bother anymore having a spectacular results and seeing the stock down. Basta. Like, stop it. But talking about the serious stuff, we were mentioning before that Palantir trades at a premium valuation, right? Because objectively, if we compare the valuation of Palantir, which is this black line, compared with all the others, seems quite expensive. It's always the most expensive in terms of EV sales, EV to free cash flow, right? But would you really compare something like Meta to Snapchat? In other words, like, would you really compare gold to shit?
Right. No, 100%.
Because something that really triggered me, and apparently I was not really alone. I listened to ServiceNow earnings call, and the guy, who's a great CEO, was regurgitating so many times that, oh no, we are the AI tower of the new century, blah, blah, blah. And then you look at the results, 20% growth, like essentially stuck to what they were doing before. And meanwhile, you see Palantir growing exceptionally well. If they don't destroy their own guidance, when don't disappoint, we would see this black line going even more parabolic. So one company speaks, one company delivers.
Amir, we still cannot hear you. It's okay. It's okay. Try it again. The earnings are not out yet, guys. Duolingo is green. We do have those earnings. Well, it was more green. It got to 124, now back at 114. We'll see if we can get those numbers. Palantir should be out in about a minute. Yeah, Amir, I think you would just have to rejoin or unplug your mic, and maybe that'll help. Palantir should get the numbers in a second. And then we are going to see 146.99. Again, Street wants 1.6 or 1.54. And then 28 cents of EPS. Duolingo, by the way, beat by 16% on EPS, and they beat by 1% on revenue. And that's why that one got the pop here. Okay, we should get it in just about 30 seconds. And then we're going to see how the street reacts.
I'll tell you mine.
Go ahead.
I actually think at this price, Palantir is cheap.
All right. These earnings are going to determine how the street interprets it. Again, 74% growth is a hell of a lot of growth. If they can get that to 80, 85%, that's where, I think even the street at some point has to recognize, wow, that's big. Up, we are green, 2%, 149. 150 we touched, back to 146. Now it's down. It's trying to hold on to it. It's going green and red. Still don't have the numbers. Wow, look at this thing, dude. It has no idea where to go.
Infinite volumes have already been traded.
That is so fun. It's like has no idea. Palantir. Okay, we got it. 33 cents. They beat by 18% on EPS. 1.63 billion. They beat by 6% on the revenue guide. Street wanted 1.54. They came in basically 100 million higher, 90 million higher than that. Revenue's up 85% year over year. Street wanted 74, beat by 11% on that revenue guide. EPS is up 154% year over year. The question now becomes, was that enough for the street? But that's a big beat, dude. 85%. Fiscal year revenue increased. Wow, the guide, they increased pretty heavily. They went from 7.2 to 7.6 billion on the guide as well. So you've got an increase on the guide itself, increase on the EPS, and then a massive smash on the revenue. 85% growth. Let's get some coverage on this real quick, and then we will get into all the numbers. But here we have Palantir, 85% growth, fastest growth we've seen in 5 years for Palantir.
That very strong and raise from Palantir, revenue of $1.63 billion. That represents an 85% year-over-year jump, its highest ever growth rate, fueled by U.S. government contracts, including the Department of Defense and intelligence agencies amid the ongoing war with Iran. Palantir is raising its full-year revenue guidance by over $1 billion. And in a letter to shareholders, Palantir CEO Alex Karp said there is really nobody making the case that the U.S. military should have second-rate AI capabilities or lackluster software. Separately, CNBC spoke to Alex Karp, and he shared, quote, "I'm planning to grow 100% next year." That's sales growth, and we're doing it with less people than we have. Karp added, "We have more free cash flow this year than revenue last year."
Karp given the guide of basically 65 to 70% growth this year and 100% next year. That means if they do 7.5 billion, he's basically saying we're going to do close to 15 billion in 2027, which means they feel pretty damn confident about the reacceleration of revenue if they are already in Q1 of 2026 guiding for 100% in 2026.
I'll give you a little bit of context. Do you know what's the expectation from analysts about the growth of 2026-27? 2026, 65, 27, 43.
Wow.
So, and the multiple on the free cash flow right now is around 80. But imagine these estimates will be completely destroyed.
Completely destroyed. I mean, and it's also hard for the street to ignore that. If he's saying we're going to do 100% and the street had him at 43 for 2027. By the way, rule of 40 was 127%. Last quarter, it's now 145. The Q2 revenue guide, the street thought 1.68 billion. Palantir says we're going to do 1.8 billion for Q2 of 2026.
On Palantir losing highly skilled engineers to OpenAI, a story we reported last week, Karp acknowledged that, quote, it's a very competitive labor market, but also said they see their growth story accelerating with fewer people. He did express frustration around Europe's, saying the real challenge for the business is that in Europe, they view AI as some witchcraft, and that's a problem for the West. But overall, guys, in my conversation with Karp, I was really struck by his bullish tone, and he said his message to the retail investor community is, you guys somehow have been ahead of everyone, and he continues to the tune of 100% growth in the US this year, and he says, I kind of believe that's going to go for a long period of time.
Seema, I mean, right now,
we'll get into the top line results. Amir, sorry, man. I'm sorry, dude. I don't know what to tell you, bro. I wish we could hear your opinion because this is a big one. Palantir now going red after hours. So this was the fear that I had. Unfortunately, every software name, even though they are not in the ballpark of Palantir, the street doesn't care about anything. If the street can't give Palantir a bid after those numbers, unless you make memory and some type of small part of the supply chain for semiconductors, I don't know if you can catch a bid. I mean, Arnie, your thoughts on some of the price action?
There are not only smart people in the world.
Yeah, I mean, look, people can say valuation all they want, but at the end of the day, I mean, you know, growth should be rewarded, especially when it's at that level. And if the street doesn't think this is the right type of growth because it's not in the right sector, then it is. And it's not just Palantir. We've seen that happen to many other companies this year. But unfortunately, it looks like it's happening to Palantir right now.
You know, what's the most insane thing is to pull out these numbers. We don't see the details yet, but it means that the US commercial is growing so fast as like 140%. Like it was already 125 last quarter, and it was almost getting to the size of the US market. So if we could value this business alone, we would be like shocked. And imagine, it's already much more difficult to grow something that is based on a subscription like Palantir commercial side, more than a model that has been deployed and now everybody's just testing models.
I agree. And so we're going to have to see ultimately on the call what Karp continues to say about the growth. Here's the quote from the earnings. Palantir's rule of 40 score has soared to 145%. We have shattered the metric of feet matched by only other fellow AI infrastructure companies, NVIDIA, Micron, and SK Hynix. So they're mentioning the other three companies that are growing massively as the only comparable name in software that has a similar rule of 40. Momentum surged as we grew 85% last quarter, our highest year-over-year revenue growth rate by more than doubling our US business. And now we are raising our full year revenue guidance from 60 to 71%, 10 points ahead of our guidance from last quarter, driven by our confidence in the accelerating US market. US revenue, 104% year over year, 1.2 billion. Commercial revenue, 133%, 595 million. Government revenue, 84%, 687 million. Revenue, again, 85%. They closed 206 deals of at least 1 million, 72 of 5 million, 47 deals. Wow, that number was like 10 last quarter of 10 million. TCV, 2.4 billion, up 61% year over year. Remaining deal value, 4.92 billion, up 112% year over year. GAAP net income, they had a 46% margin, 754 million. They had an adjusted operating income margin of 60%. That's the highest they've ever had. I think last quarter was 51%, if I'm not wrong. 984 million, rule of 40 of 145. They have 8 billion of cash. That was 7.4 last quarter. And then GAAP net income of 871 million. 53 cents on every dollar goes down to the bottom line for Palantir. Sorry, Amir. Arnie, some initial reactions to those numbers, and then I'll get into the shareholder letter.
First reaction, wow. I'm happy to see, actually, as we were saying, US commercial growing more than 130. Imagine if that segment was isolated, and now is getting closer and closer to become the biggest driver of the company. If the US government wouldn't have accelerated this much in this last quarter, it would have already succeeded.
I agree. The shareholder letter, guys, is not out yet, or at least I don't have access to it. So once I get access to it, I'll read it. But
look, the fact that you still have a US commercial remaining value doubling and so on, it gives enough confidence that all what we're seeing is really set to continue. This is a company that can guide revenue with a high degree of confidence. So if they are confident into raising the guidance at 71%, they already know that 70-80% of it is already probably booked.
Yeah, I mean, the street at this point is expecting them to guide every quarter up. And if they continue to do that, then, this is going to be a lot more than 71%, which is quite incredible. Palantir's, again, flipping a little green after hours. There's a lot of other names on earnings that are getting destroyed. Duolingo right there, down 10% right now. I don't have their numbers, but the street, I feel like the street wants to take them up. Like the street's like, oh my goodness, like, yes, we should be buying this right now. It should be going up. But because of whatever, I don't know, narrative they have on software, they're like, well, we can't buy it because we have to dump every software name, but they want to buy it. So it's like trying to figure out which direction, can it really go?
Please, does it work?
It works.
Oh my God. Good morning, everyone. Man,
the stock was just waiting for you.
Amazing.
Yeah, the stock was waiting for you, Amir. It was waiting for you.
Yeah, you're welcome, everyone. Oh my God, these numbers are insane. 145 net dollar retention. I had them at 142. I was like, yeah, I'll be happy with that. And they just 150 net dollar retention. Oh my God. Like Palantir, they just keep outdoing themselves. And the thing about Palantir earnings, which you won't be seeing from all of these other AI companies, is that these are sustainable numbers. We've been saying this for so long. A majority of the growth is from existing customers. They just keep scaling. That's why it's going to be so sustainable compared to any of these other companies that see some few quarters of growth and then they're gonna die down. And that's what the street was expecting. If you looked into their expectations going into this, they're like, yeah, we might see some growth, but then it's gonna calm down. No, it's gonna keep accelerating. That's what we've been saying, and no one at the street has been paying attention to that, except us. So oh my God, these are insane numbers.
Amir, what do you think about that 100% guide that Carp is giving for 2027 already?
My mind is blown. I just saw that. I didn't have time to process that. for me, I had them also decelerating. I had them doing a total of 66% this year, 53% next year. And I'm like, oh my God, this Palantir is so undervalued. Let me like plug in these new numbers. Like this is going to be some insane, like people saying that Palantir is, expensive, like sure, but they're growing into that. But if you look at valuation, Palantir is very undervalued here, like, and that's not something that we've been able to say for so long, but they just keep raising intrinsic value each passing quarter. It's just so insane. If they can do 100% next year, oh my God, like I want to sit and digest this in my spreadsheet. I know the people over at Palantir make fun of me for my spreadsheets, but this is some insanity going on here.
Look at
No,
we
but
were already.
to your point, I think most of the bullish analysts also had them deaccelerating because it's hard to go from 70 to 100. But Amir, you're so dead on. If the acceleration is due to the net dollar retention of existing customers, I mean, that becomes a lot more sustainable, and that becomes one of the only software companies that can actually accelerate from this type of a base.
But here's the thing: they wouldn't be able to say guide for 100% if they didn't have visibility. They have visibility because they already have the customers. They already see the demand from like, oh my God, our customers are going to keep scaling. That's why I think they could put out, 82%. I mean, the guide was 1.54, right? So they're gonna smash that 100% number for sure. We already know that, but the reason they were able to do that is because they're already seeing how their current customers are scaling. Like they can't predict, like, oh, we're probably gonna make 50 new customers next year. No, they're seeing that from their existing customer base. So that's why they can be so confident, throwing those numbers out there. Which makes it even more exciting because that tells you they have so much runway. I didn't even know how many new customers they have. I see that the slide deck is out. We probably passed that 1K number now, but that's like 1K. Look at like Salesforce, like 200K customers. Like when you start imagining what Palantir can look like in the future, like you kind of start blushing.
I agree. Let me read the letter, and then we'll dive deeper into the numbers. You and Arnie can start pulling up the slides and going through them, and I will get through this letter, and then we'll keep going from there. Okay, I believe it's starting off with a German quote.
I want your German.
An der Regel zu folgen Gaben ich nicht der Regel folgen. And to think one is obeying a rule is not to obey a rule. Ludwig Wittgenstein, Philosophica Unterschiedung 202. We believe it is not hyperbolic to say that nearly all AI workflows that actually create value, especially on the battlefield, are built on Palantir. We are an N of one. Our financial results now demonstrate a level of strength that dwarfs this performance of essentially every software company in the history at this scale. We generated $1.6 billion in revenue for the first quarter of this year, a record in our company's history, representing a soaring 85% growth rate over the same period the year before. Put differently, we almost doubled the size of our entire business of all of our revenues generated across the government and commercial sectors in the span of only 12 months. The significance and enormity of this accomplishment, the magnitude of this feat against not insignificant headwinds, may be lost on some. We stand on the walls, sentinels, and the inner sanctum against the assault of AI slop. The ontology is based firmly in reality. There is here a dialectic between ground truth, tribal knowledge, and enhancements. With regard to Wittgenstein, quote above, we suggest an addendum for AI. One must actually expose reality, not merely appear to do so. The institutions that we serve, representing the durable, load-bearing infrastructure of our society, grasp this. They demand nothing less. They know society can afford nothing less. For over 20 years, and across 5 administrations of both political parties, Palantir's platform has enabled programs that have delivered results for people all over the United States and around the world. We achieved this staggering growth with a hiring discipline that is too rare in the software industry today. This quarter, our revenue per employee rose to $1.5 million on an annualized basis. In the United States, that figure was $1.6 billion. These numbers have taken even greater significance in light of a sales headcount that is smaller now than it was even 2 years ago. And yet, Palantir is now literally one of the most impactful companies on the planet. There seems to be a rotation amongst AI model companies who engage in an intensely competitive race in which we have seen token costs suffer a 1,000-fold decline over just a few years and where winners and losers swap places every 6 months. Our path has been different, building a juggernaut of a business that is delivering results to our partners in the world as it is today. We are in a category of our own. While some within the industry are spending their way to a version or likeliness of growth, we have built the platforms that are delivering record and accelerating levels of profit. We generated a total of $871 million in profit in the first quarter of the year, more than 4 times greater than the same period the year before. It is worth reiterating our quarterly profit, the largest in our company's 23-year history, has more than quadrupled in only 12 months. These are not incremental or marginal advances. These are signs of a facelift, even sublimation, to borrow the concept from physics. Our record levels of revenue and profit are the direct result of the revolutionary way we built this business, which is unlike anything we have seen in corporate America. Indeed, we generated nearly as much in profit in the first quarter of the year as we did in revenue only 12 months ago. What business in the world at this scale has ever accomplished anything of the sort? And, quite frankly, I think Karp is right to be asking these questions in the shareholder letter, because he's trying to make the point that this type of growth really is unprecedented. The United States remains the center, the constant core of our business, and that business is erupting. We generated $1.3 billion in the United States alone last quarter, representing a 104% increase over the same period to the prior year. To be clear, our U.S. business more than doubled in 12 months. The growth rate of many other businesses tend to slow down, to ease as they scale within their markets. Ours has not. And the twin pistons of our U.S. business are now firing in sync. Our revenue from U.S. commercial customers increased to $595 million in the first quarter, representing a growth rate of 133%, while revenue from U.S. government customers, including our nation's defense and intelligence agencies, reached $687 million, increasing 84% from the same period last year. It is worth noting that there is really nobody making the case that the U.S. military should have second-rate AI capabilities or lackluster software. If we're going to ask someone to help step into harm's way on behalf of our country, they deserve the best. Palantir was founded to strengthen U.S. national security, to protect Americans and their freedom. We have done so across Democratic and Republican administrations. And so, on behalf of all Americans, with deep pride, the mission continues. Sincerely, Alex Karp, co-founder and CEO of Palantir. Double beat across the board with a pretty massive acceleration of growth. Arnie, thoughts, and then we'll get into the deck itself.
How cool is that question? Has anyone else ever done something like this before?
Yeah, and I think, in a market environment that we're in right now, obviously Palantir probably understands that software companies are being questioned in terms of the durability of their growth. It was very important that, Karp reiterated over and over again in that letter that this is unfathomable. And if they're guiding for 100%, then that means, to Amir's point, they have an understanding of the sustainability of their revenues, which there's just not many other software companies that can do that.
Yeah, because it's not only about the growth per se. Is what about the sustainability of the growth? Here we're talking about a company that once it takes the direction, it has a market fit, can keep having this direction for a very long time, like a train. Just a little note here. Notice, if your profit are what it was revenue 1 year ago, you are into something very big, especially if you have achieved that without M&A, not like Snowflake, ServiceNow, who keep buying new stuff.
I would agree. Amir, do you have the deck? And if you do, can you send it to me in the chat? Because I'm not seeing it.
Yeah, I'll send it. Over 1K customers. Kind of had to be. But yeah, these are some pretty amazing numbers.
Okay, let's.
You got it?
Yeah, anything that stands out to you, and then we can keep going from there.
No, I'm going through it still.
So let's start off with this. We looked at the financials. So Rule of 40 at 145, operating income 46%, GAAP net income $871 million. That's the highest they've had in the history of the company. U.S. revenue growth 104, government 84, commercial 133. That customer count officially has crossed 1,000. 1,007. That's up 31% year over year, 6% Q over Q. Commercial customers at 832, government's at about 200. And that is up 7% Q over Q. 206 deals. I think they had 200 a couple quarters ago. Last quarter was maybe 180, but that's a significant amount of deal flow going into Q1, which tends to be kind of light for software companies. Q3, Q4 is when it ramps up. So the fact that they were able to accelerate that in Q1, very important. $8 billion in cash. 7.4 billion last quarter. They're guiding for 1.8 billion for Q2. Again, the guide was the street thought it would be the street thought they would do 1.65. They basically did that this quarter. They did it a quarter early, and they're raising it by 200 million for Q2. And then revenue of 7.6 is the increase for the full year. it's a pretty aggressive beat and raise. Stock is still, it's not red. It's just not having an explosive move, which honestly in this market environment, maybe that's good enough. But if this thing was, losing 140 after hours, it would be quite, it just goes to show how much pressure they had on them. Because if they didn't put up these types of results, like if the street's ready to give them a little bit of downside momentum on these results, what could have happened if they didn't put up these results, and how would the street have reacted to that as well? Pinterest is up 20% after hours. Duolingo is down 11%. Pinterest with a double beat. That stock was down, I think, like 60% over the past year. So maybe it had nowhere to go, but up 18% right there. Palantir up 1%. IGV up a little bit. SPY is flat. NVIDIA also basically flat after hours. 1.82 or 85 is your guide going into Q2. And then adjusted operating income also was raised to 4.4 to 4.5 billion as well. Let's look at a couple other quarters before we dive deeper into Palantir. A couple of other companies. You had On Semiconductors, which was up 100% going into the print. This one, stock's taking a little bit of a hit right here.
Specifically 64 cents. That's a 4-cent beat with revenues of $1.51 billion for that same quarter. Q1 non-GAAP gross margins came in at 38.5%, so that was in line. But more specifically, this company is extremely exposed to the auto market. We saw from competitors like Texas Instruments and XPI that auto was improving. In this case, auto fell light for the company compared to estimates at $737 million. However, industrial revenue did improve, or I should say beat estimates at $540 million. They also said their data center revenue doubled year over year because of broader adoption. However, this is a much smaller portion of their business. Their Q2 EPS guide came in higher, 65 to 77 cents. Q2 revenue guide was also higher. Their Q2 non-GAAP gross margins, the range that they gave was also higher. And the company in the release, the CEO saying that the demand strengthened in the quarter. We've moved beyond the cyclical drop onto a path to recovery. So, somewhat positive reaction. The stock, though, is down about 5%. Keep in mind that it did run up 65% just in the last month. So it could just be some profit taking. Guys?
Palantir basically flat after our hours. Arnie, we got the numbers here. Is there anything in the deck that really stands out to you? And I guess if you had to guess why the street's not really giving it the premium here after hours, what would you say?
I would say so far I don't really see anything that makes me negatively surprised to the point that I would say, oh, this reaction of no reaction is deserved. I was checking right now the number of deals just to give a sense. Last year, they closed 139 deals of at least 1 million. This quarter, 206. Of which 47 of at least 10 million versus last year 31 million. So overall, the numbers that matter are truly good. So I personally like that they found now their own way of communicating the results that are a bit more homogeneous. And I remember the first times, every time some slides appearing, then disappearing, changing stuff. I think now they found their format, which is very clear, very exhaustive, and essentially the more I look through the numbers, the more I'm happy.
Yeah, I think the only thing I was like, why would they not, be pushing up? I think RPO didn't grow as much as some people might have expected, since Q3 into Q4 was an insane jump in RPO. It wasn't such a big jump Q4 to Q1. That's like the only thing. But I mean, look at the margins, like over 46% operating margins. We've always been talking about there's two sides of the story. We have the revenue growth, which we all know is like gonna be insane. But what makes it like really special about Palantir is that they keep expanding margins as well at like a similar rate. And 45%, 46% plus operating margins, also insane. I had them like, if we can keep above 40% consistently, I'll be happy. And we're like approaching 50% operating margins like really, really quickly. a lot faster than I expected. Like if I look at my model, we were at like 46% plus like in 2028, like 2 years out, and they're doing it like in Q1 26. So that's also insane. But I think one number that a lot of people that are Palantir haters are gonna have to eat up is that year-over-year dilution in shares is 0.7%. Less than 1% dilution. And I think that's like a number that a lot of people have been attaching themselves to. That's what our friend Michael Burry has been saying, like, all of this dilution with Palantir, like, how can you own a company that dilutes its shareholders like that? It's less than 1% now. Like, well, what's your argument now? Like, can't really be saying anything.
And to your point, it's less than 1%, and they're doing it to retain the best talent in the world, and they're not even really hiring that many people. But they're like, the fact that they're guiding for 100% growth and raising the guide from 60 to 70, and their headcount's lower than it was 2 years ago. Again, I wonder how many companies in the history of the stock market have been able to have that type of revenue acceleration without scaling headcount.
I have a big problem now because I use my phone as my camera. I restarted my computer. I can't log into my brokerage to buy more Palantir now. Like, if Palantir is not pumping on these numbers, I don't know. Like, I just want to quit the stream, use my phone to log into my brokerage, and buy more Palantir. So I want to.
So let me ask you the question we were talking about before you came, valuation. Can you give us a little bit of an overview on how you think fair value should be for?
Fair value 199, 200 before these numbers, and that's like compounding over the next 10 years. Total revenue compounding at 43% is what I have in my model. Average operating margins on that is like 48% over these next 10 years. But I'll have to revise this. Like, Palantir should be trading above 200 right now. That's what I think. I'm of course gonna be breaking everything down and post about it and fair value after I update this and digest this, but there's no reason Palantir should be below 200, like, valuation wise. Sure, you can like still attach yourself to the multiple and call it expensive. That's one thing, but like overvalued, I don't see how Palantir is overvalued, especially since each quarter they just keep accelerating even more. And as we've been saying, who knows when it starts decelerating? Like, these numbers are so sustainable. The margins are sustainable as well. We know that they have over 4 billion in that they haven't even collected yet in outstanding deal value. Like, when does this story end? Like, it's not soon. Like, it just keeps accelerating. So yeah, I think 200 fair value at least, and then we'll see exactly where that is. I mean, it's hard to be accurate with a company like Palantir that, like, each passing quarter they just throw everything on its head, and like it's even better than you imagine, which is of course the kind of surprise you want to have when you're invested in a company. You want to have that positive surprise. I don't think anyone, I don't care how big of a Palantir bull you are, no one came into Q1 2026 earnings like, yeah, they're probably gonna raise guidance over 100% next year. Yeah, no one expect, not us for sure. I mean, and we're like big Palantir. We follow this company like for 5 years already. We're taken by surprise. So imagine the street that doesn't even pay attention to Palantir. So I don't know why it's not pumping. Like, I don't know what's going on geopolitically. Like, even the geopolitical situation is arguably beneficial for Palantir. Like, they strive in, crisis mode, even in calm mode, like any environment, they're thriving. So I don't know why this company is not moving up right now.
Shout out to Gokar, by the way. He is definitely the one person who absolutely is not surprised by these numbers. Arnie, your thoughts on what Amir said as well?
I was checking a bit my brutal free cash flow model just to have a sense, but what is actually the street implying in terms of price if the street believes this is a right price? So essentially starting from the price and seeing what kind of numbers would actually make sense to justify this number. Essentially, if you assume growth to be 74%, free cash flow to stay at 60% as of today, we reach a price of 200, okay? already by stopping the growth at 30%. So 2026 on gives 200 in valuation already.
So
So
that
you need-
reacceleration obviously would probably imply
you need to go very down. You need to go to like 25% for the next 10 years in order to arrive to the valuation it currently has. So
yeah, I
it's
think
valued,
go ahead, continue.
it's valued as if it is supposed to grow 25% while growing more than the double while it is expanding the margins. And Karp himself said, look, our margins are probably expand even further. They are at around 60%, which is insane, but we're not hiring many more people, which means
margin acceleration will continue. Yeah, I think the big divide here between the people who are bearish and bullish are how long do you think the growth is going to be able to sustain itself? That's the biggest thing. And if your model says they can grow, sustainably 40, 50% for the next 10 years, next even 5 years, that's different from the people that obviously have this deaccelerating to 20, 30%, which is a normal assumption to make, that, 40, 50% growth year over year over year. It's not easy to do because the base gets harder and harder. But Karp just said we're going to go from 70 to 100. If they sustain it at even 70 over the next, every assumption has to be changed. And that would be what separates a lot of different thoughts on Palantir.
Okay, so let's ask ourselves the opposite question. So what would Palantir need to do? Like, what would need to happen so that Palantir stops growing like this?
I mean, I think fundamentally their core products would have to be not delivering results, right?
Claude disruption, bro. It's coming.
Yeah, we vibe code the ontology. Yeah, it has to be some macro event like a Claude taking away the infrastructure moat that they built, or they just stop executing. And if both of those things don't happen,
a hack, hard to hack something that is deployed by the government at that level of security, but I can't really think of other cases.
Let's look at DA Davidson and the institutional reaction after these numbers.
From Palantir, they just grew 85% at 60% operating margins at scale at a $7 billion run rate. Nobody can do that. There are no other companies that are growing at these rates, at this level of profitability, for mostly recurring revenue. So it's a universe of one. They're doing phenomenally well. Expectations are high because they keep raising them, which is probably why you're not seeing a lot of reaction in the stock. But the results themselves, they keep getting better every quarter.
I mean, I don't know, the expectations, like meaning the estimate, the expectation in terms of the pricing of the stock didn't seem to be anticipating a lot going into the numbers. I'm just wondering why you think, if these numbers are truly extraordinary, why there isn't much of a bounce in the stock when it's not like it's been a high flyer into earnings.
Yeah, that's the trap they're in right now. Yeah, they were trading before they reported this. They were trading at 90 times cash flow. I want to say that by the time we all adjust our numbers, they're trading at more like 80 times cash flow. That's very high expectations. That's a lot more than anything else. And the expectations for the fundamentals are very high because they've been accelerating every revenue for the last couple of years. So they're in this trap that there's nothing they can do to impress investors, because every quarter keeps being better and better than the previous quarter before that. But I don't think they care. I think what they care about is the business is doing phenomenally well. The stock over time has performed very well, and they're going to continue to grow this business very rapidly. There's really not a lot of reason to believe this is going to stop anytime soon.
Gil, what do you use in terms of macro factors, industry drivers to model the performance? Where is Palantir getting all of this growth from, whether it's from competitors or just kind of new functions, or is it just the free spending by the Defense Department at a time of war?
Yeah, so we thought the commercial business would get bigger than the government business. The reason it's not is that the government business accelerated a lot. So they're almost half and half right now. So it is two completely different things. One is the United States government is increasingly reliant on Palantir for its most critical systems. I think it's very well understood at this point that a lot of the successful targeting that happened, especially at the beginning of the conflict in Iran, was Palantir tools. So they're blowing away everybody's expectations in the Department of War, which means the Department of War is going to rely on Palantir more and more. Local municipalities in the United States will rely on them more and more. That's what's happening on the government side. On the commercial side, they're just having tremendous success supporting those commercial customers, so they keep doubling that business. They're in such good shape, they don't need salespeople to hit enterprises up. They have more inbounds than they can handle. We went to their conference, and what we heard from most of the CFOs we talked to of their customers is they called Palantir, and Palantir's in a position to be selective. So that just tells you the success their customers are having is bringing in other customers. That's a very rare position to be, especially in software these days.
Yeah, no doubt about it. It's pretty remarkable. We'll see, as they start a race to grow into that valuation as they've done so far, Gil. I appreciate the time, Gil Luria.
Thank you.
All right. The institutional side basically saying, unfortunately, a ton of that excitement was priced in. Stock is down 20% for the year, which is why you're not seeing too big of a movement. Amir, did you see anything on international growth as you're going through it?
Yeah, I have it right here. Give me 1 sec. Also, 8 billion in cash. I don't know if we talked about that. Let me see. Non-US commercial actually grew 26% year over year. So it is at an all-time high, non-US commercial. I saw that they added one non-US international customer. Let me just double check that. But yeah, it's nothing to be really, really excited about in terms of, international. We've been knowing that for a long while. Actually, yeah, 14% year over year on non-US commercial customers, an addition of 8 non-US commercial customers. So yeah, it is, after decreasing 3 customers last quarter, we're actually, increasing it now. But the big thing for me is not, in international right now, because if we can grow like this with only visibility into, the US, imagine, as we've been keep saying, like, imagine when, Europe starts playing ball. And they better start doing that, because the numbers, in terms of GDP and stuff coming out of Europe, it's not looking very bright for that region. So when that catches up, I don't even want to imagine what the Palantir's numbers are going to be looking like when that also starts accelerating properly.
Yeah, I think that's also important to mention, which is that, all this growth is basically the US right now. They haven't really turned on international for many of the obvious reasons Corp has mentioned about Europe. When that does get turned on, which eventually they're going to have to adapt, obviously that could be very, very beneficial for Palantir.
I think we should stop thinking of Europe for a bit. From what I'm seeing, there are very big frictions outside of the UK, where Palantir is expanding very well on the government side, on mostly healthcare with the NHS, but we also saw very good wins in terms of military and also in terms of commercial acquisitions. Overall, I don't see any real signs of positivity coming from Europe, but there are many positive signals coming from Asia. I think it may have went a bit under-noticed, but Palantir will have the first APAC summit in Seoul very soon. So I think all the go-to-market has been not targeting much Europe, but we are seeing Korea, Japan as the true vector of growth in the international market, probably under the hypothesis that if in the US we consolidate our positioning, that positioning is seen in Japan, in Korea, actually we can't avoid this moment. We need to join the revolution. Once the Europe is surrounded by success stories all around, but in Europe, there will be no way then accepting that also Europe needs to be dominated.
Yeah, that is a fair point. Obviously, the larger forces are making it a bit harder to imagine European growth comes at scale. We all know that Palantir, from the angle of the media, is not really seen in the nicest way right now. But the fact that they're able to grow the U.S. business as much as they're growing, even though obviously even the U.S. media is not the friendliest to Palantir, also goes to show how much the customers really are just happy they're getting value, and that's why they keep paying for the software.
That D.A. Davidson analyst, didn't he say something interesting like, well, the stock is not really up because everyone is expecting this company to be amazing, but it's kind of strange because the street refuses to actually have any high expectations from Palantir. Like, for how many years now has it always been in line with Palantir's guide? Like, they never learned that Palantir is going, to do better than their guidance. So street expectations surely aren't that high. So what do you guys think he really means when they're like, yeah, everyone is kind of expecting Palantir to do better, but it's not really reflective of the estimates for the company. So what do you guys make of that?
As we were saying just before you entered, can you share my screen, please? So essentially, analysts have been wrong forever on the stock, and right now,
Arnie, can you zoom in a little bit?
Oh yes, sure. So right now, what analysts are expecting in terms of growth for 2026 is 65%. Going to 2027, 43%, and 2028, 42%. Essentially, analysts expect 2026 to be the peak year of growth, and these numbers will be just destroyed. But starting from 2026, and then Karp mentioned, look, we plan to grow twice as much in 2027. So even if already, like, I'll give you my feeling is already with these estimates, the current valuation of around 80 times free cash flow is not that high. It's actually reasonable. But once you start thinking in terms of these analyst estimates will be destroyed, then is when you start realizing that what you see as 80 as a multiple in reality is a much, much lower one.
Also, to your point, Arnie, I don't know what the multiple is on free cash flow for OpenAI or Anthropic. I'm assuming 0 because they have no free cash flow. But the fact that those companies are getting $1 trillion valuation, and if you believe they're essentially creating something that will be valuable, of course, but is a race to the bottom. I mean, the fact that OpenAI came out with their own version of, I think they called it Frontier, which was they were talking about forward deployed engineers, and they were talking about how do we implement AI inside of enterprises. Even they're realizing the value is not in the model. I mean, people stopped using Claude Code over the past couple of weeks to use Codex more because the tokens increased on OpenAI because they had more compute. People switched immediately. The value is in implementing this infrastructure. If you compare it to those companies, one could argue Palantir actually is much cheaper, especially if they're accelerating these growth rates.
While just a month ago, everybody switched to Claude. It's like, oh, Code is amazing. OpenAI sucks.
Yeah. Go ahead, Amir.
Yeah, no one is loyal to any of these LLMs. It's just like, what's the flavor of the month? There was also prior to that, there's like Gemini being touted as the number one. And then it's just, ebbs and flows. And people are not loyal to one platform or another when it comes to, Cloud, OpenAI. They will just move to what's currently the best. And that keeps switching, every which week. So we, as Karp said it from the very start, I think we all realize that, yeah, these are, commodities at the end of the day. It's about how you, on an institutional level, find a way to implement it, safely, and how you start to extract real value from it, when you have the whole business context and stuff like that. Now, that will probably get better with, these LLMs. They will probably become better at contextualizing your whole business, but I don't think that they will be able to replicate, all of the context that an ontology gives you for a very long time. And that's not really what they're focusing on. They're not focusing on how do we replicate Palantir. So I don't see Palantir having any real competition for a while still. They are just, pushing that next frontier model just to get ahead of their competitors, and it's costing them a lot of money. I mean, we saw, OpenAI concerns about funding, stuff like that. So they're going to be running into problems. I don't know when they're going to go public. It's going to be interesting to see. But yeah, Palantir, not really concerning themselves with that. And I don't know why the street is more excited about, burning cash for something that might, be out of favor in 2 weeks, and, bidding that up to over $1 trillion when you have something like Palantir that is sustainably growing at insane margins. So I know which company that excites me more in the AI world, but it's going to take some time for the rest of the world to catch up, it seems.
If we have a couple of minutes, I would like to share with couple of sentences written by a guy who is a founder of a company that seeks to deploy Palantir. I found these sentences very fascinating. So, Anthropic is pushing the boundaries of reasoning. It can understand context, generate responses, and increasing the orchestrate workflows. That layer is moving fast and will continue to improve. Great. Palantir is solving a different problem. It is building a system where decisions can exist inside the structure, move through workflows, and execute within real operation constraints. The difference is subtle, but it shows up quickly in production. A model can suggest what to do next. The system still has to carry that suggestion forward through context, approval, execution, and into an outcome. So intelligence without a structure remains suggestion. It's like having a fastest car. Speed matters, but is not sufficient on its own. You still need roads, traffic system, constraints, and a way to get from one point to another reliably. Without that, speed doesn't translate into movement at scale. So every enterprise systems behave in a similar way. The model can generate the next step, but the system has to carry it forward. So the model make a little step faster, but at the end of the day, when it comes to making many more steps, what is really important is to have all the machine that makes you move forward. And the machine that makes an orchestration of infinite models to actually go forward safely is actually Palantir. So I like these sentences because they help us understand, okay, what is the different direction we are seeing with Palantir. And all the models that we were saying are fighting each other to the last penny, like the amount of money that has been deployed that at the end of the day still converges to NVIDIA is just insane. What was, Amita, you may know better, like what was the aggregate CapEx from all the hyperscalers guided for the next year? I think it was something more like 200, 300 billion.
For 2027, it's closer to 800 billion. For the rest of this year, yeah, it'll be around 650. A lot of CapEx that's being spent on being able to get these models to be better. I mean, again, it goes down to a very simple question, especially around these software companies like the ServiceNows, the Salesforces of the world. They keep saying, we are not in competition with these model companies, we are using them. And that's fine. That makes sense. Palantir would say the same thing. The difference here is the acceleration of growth in the and I know Salesforce is doing 40 billion of revenue and Palantir is not doing that much. But the point is, if you're going to be a growth, if you're going to be a leader in the age of AI, 7, 8, 9% growth, no matter how big your base is, it's still tough for the street to get excited about that. And once again, the bears will then push back and say, well, Palantir can't keep up this growth forever. Well, probably not. But if it even keeps up for the next 5 to 10 years at these levels, and if Karp is saying 100% next year, if they end up doing 112, 115%, like that's where it gets kind of nutty when you think of the level of growth. And the other important thing to understand is they only have 1,000 customers. Like Salesforce is putting up this type of growth in ServiceNow. They have hundreds of thousands of customers. So really the market opportunity is there for this to become one of the biggest companies on planet Earth as they continue to expand. But the reason they're able to get so much revenue out of so little customers is because, going back to what Karp constantly says, they actually deliver value, which ultimately is the differentiating value variable between how to value Palantir positively or negatively.
You know that Palantir is getting as much annualized revenue now. So the net addition in the quarter, which is very similar, if not already exceeding that of ServiceNow, which is twice the size. What does this mean? It means that if already just by keeping this level of execution, Palantir can get very, very big. But what we are seeing is not Palantir slowing down, actually keeping accelerating. So it's only a matter of time before Palantir becomes literally the biggest B2B company, not only in terms of market cap, but in terms of real business. Think of it. ServiceNow, Salesforce are 2x, 5x. Like Salesforce is literally huge compared with Palantir. Yet, what is the real outcome apart from they sell something? So once you start weighting in the weight of the output Palantir is providing in every sector, every direction, and as you mentioned, the number of clients is so little. The brand now speaks for himself, and it's not only a brand that is cool. It's a brand that works. I think it's a little matter of time.
I just realized that they restated the RPO. I wonder why they did that. They removed. They went from 4.2 billion for Q4 2025, and now they're reporting it as 4 billion only. So they removed 200 million. I found the reason the stock is being punished, guys. So why they're not? They restated RPO lower. Found the reason.
Well, look, RPO is very important. We saw a massive spike in Q4. In this quarter, we don't see a subsequent spike as well, but it's also true that is the cyclical part. And we know that many, many deals that have been executed are on the government side, which are not included into the remaining RPO for how this stuff is written in the financial statements.
Okay, we should be starting the call in a couple minutes. Let's do this real quick. Arnie, if you had a question on the call, what would you ask? Same thing to you.
Maybe what I asked you before, like what could actually stop this?
Amir?
Yeah, that's a good question. I kind of am starting to get, I didn't used to care about this, with the cash pile, but now we're at 8 billion. And sooner or later, they're going to have to start deploying that cash somewhere. I mean, treasuries will likely get less and less attractive as, time moves on, new Fed chair, lowering interest rates. Who knows what the rates are going to be looking like. But how can you utilize the cash to accelerate the growth further? Because it's a capital light business. They're not training a model. They don't need so what's the plan for the cash? And that's a recurring question for 3-4 years now, but having an answer on that finally would be interesting.
Okay, what would you make you happy in terms of deployment of this cash?
8 billion into Anduril before IPO, sell after IPO. What I would do.
And by the way, for everyone saying they don't buy back their stock, Trump had a rule for defense contractors to stop buying back their stock. So they put an amendment in their 10K back in February that they canceled their $1 billion buyback. So that was more so because Trump doesn't want defense contractors buying back their stock. All right, I think the call is live.
Let's go.
That may be considered forward-looking within applicable securities laws, including statements regarding our second quarter and fiscal 2026 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
The last 3 months have been some of the most exciting in the history of Palantir, as we've watched the whole world begin to see the incredible promise of operational AI, as well as the risks and perils of being beholden to models alone. We achieved 85% year-over-year revenue growth, our highest overall revenue growth rate as a public company, and 16% sequential growth. Our US business, now 79% of total revenue, surpassed 100% year-over-year growth for the first time since our DPO, growing 104% year-over-year and 19% sequentially. Our Rule of 40 score climbed to 145, up from 127 last quarter on absolute AIP dominance. AIP is the only platform that establishes a true AI no-slop zone, a necessary requisite to converting potential AI leverage into compounding real-world value without risking enterprise disaster. As the AIG CEO noted in their recent earnings call, they are deploying AIP to implement a multi-agentic underwriting and claims solution comprised of purpose-built agents ingesting submissions, evaluating risk, benchmarking pricing, and detecting fraud, all coordinated through the ontology. When you want AI to work in production, in a real enterprise, at real scale, where there's no room for slop, there's only one platform, AIP. It is not just the playbook of cutting costs and streamlining processes. AIP is the battle-tested platform that allows the wholesale redefinition of how companies compete within their industries. The depth of our customer commitments reflects that ambition. Referencing our work with Motor and Freedom Mortgage, where we are revamping the end-to-end mortgage process with AIP, the Motor chairman stated, quote, "This strategic partnership will reshape the future of our industry. Together, we're building technology that can help improve affordability, lower borrowing costs, and expand access to homeownership for millions of Americans." Our U.S. commercial business grew a
That's not me, that's them. Probably will update in a second.
testament to the compounding real value created for our customers. For example, on the back of a 26% increase in engine production with AIP, GE Aerospace deepened their partnership with Palantir last quarter to deploy agentic AI-powered solutions across their production system and military aviation supply chain, with a shared mission of ensuring that more aircraft remain available to train America's next generation of U.S. Air Force pilots. Ondas and Worldview expanded their work with Palantir to bring AIP to the stratosphere and build the operational backbone required to scale their missions. They noted, quote, "Palantir-powered workflows don't just make one launch faster, they make dozens or 100 simultaneous launches possible with the same operational efficiency." Load-bearing institutions upon which the West depends know or will soon know that our AI platforms are the indispensable means of delivering their must-win operations. An upshot of our transformational work across every domain. The foundation remains our deployment of Maven Smart System to empower our troops. As the Chief Digital and AI Officer at the Department of War noted, quote, "I care about one thing and one thing only, that the 18, 19, 20-year-old kid who had no choice in where he went or what threat he was facing, I want him to win and come home. That's why we do it. Palantir is very helpful in delivering this." Beyond Maven, ShipOS, in partnership with the Department of the Navy, has produced remarkable impact at several manufacturing industrial-based suppliers already, including dropping manufacturing bill of materials approval time from 200 hours to 15 seconds, increasing speed of contract review cycles by 57 to 73%, and reducing monthly material planning time by 94%. Just as commercial organizations are reshaping their industries, ShipOS is the reinvention of America's maritime industrial base. This is just the start of how our support of manufacturing processes will transform existential programs for the U.S. government. In fact, we've already seen the government step in to transition and scale a successful private sector manufacturing program we're supporting. On the civil side, the USDA awarded Palantir a contract of up to $300 million last month to provide USDA with capabilities to support American farmers, secure farmland, enhance supply chain resilience, and shield agricultural programs from fraud, abuse, and foreign adversary influence. In government and commercial, Palantir is transforming how load-bearing institutions operate and how they win. I'll now turn it over to Shyam.
Thanks, Ryan. For over 2 years now, we've been saying that while LLMs are improving, models are converging, and the cost per token continues to drop precipitously. GPT-4 equivalent performance that cost $20 per million tokens in early 2023 is now approximately 1,000 times cheaper 3 years later. Because of this increased efficiency, use case demand for tokens is exploding. Our AIP workflows today utilize vastly more tokens, agents orchestrating across the ontology, chaining reasoning, tool use, retrieval, and execution, and it's growing. This is Jevons paradox. It's the single most important dynamic in enterprise software right now. When the Victorians built more efficient steam engines, everyone assumed coal consumption would fall. Instead, it skyrocketed. Cheaper transport meant more demand for transport. Tokens are the new coal. AIP is the train. As inference gets cheaper, the number of tasks that you can economically assign to AI grows exponentially. Precisely because tokens are so much cheaper, agent flows, call tools, self-correct. But in practice, the number of tasks that you can trust a model without the right harness exponentially declines. More tokens means more slop. And the more commodity cognition you consume, the more you need a system that can prevent the economic harm so you can harness the economic value. That system is AIP. That intermediary representation is the ontology. This is also why we are seeing the death of legacy software. AIP replaces static workflows not by replicating the playbook, but by eliminating the need for one. Thomas Cavanaugh Construction, 97% of their employees use Foundry every day, and every other piece of software must now justify its existence. And so far, they haven't been able to. We're seeing this internally too. This quarter, we replaced our old expensive CRM with an AI-first solution built on AIP in a few months that users absolutely love. Our customers are seeing the real value is not automating what you already do, it's doing what was previously impossible. A major telco set out to automate 10 million customer calls a year. The real insight was that the most dissatisfied customers never call. They churn silently. The reframe was counterintuitive. Don't use AI to reduce calls. Use it to generate them. An AI advocate that proactively calls on every customer's behalf. The point is simple. Use AI to do more work that was never economically feasible before AIP. For every agent action, our customers need to answer 3 questions. Who authorized this? What did it cost? Can I trust what it did? These questions need exact answers with precision. There's no tolerance for slop. We're building a platform-native agent engine SDK, a single set of primitives for building, persisting, governing, and operating ontology-native agents. A common layer that lets you visualize every agent in your enterprise and control it, regardless of how it was built. A true agent operating system. On top of that, unified cost attribution per agent, per session, per workflow, with administrative caps. Full provenance, so every ontology mutation traces back to the agent and reasoning chain that produced it. Security marking propagation from input data through agent sessions onto all output with approval gates for any workflow that could reclassify information. That's how you get a CISO, a CFO, and a combatant commander to say yes. AIP is the no slop zone, the platform where every agent action is governed, attributed, and auditable. Turning to US government, on the foxhole side, Maven met its moment across real-world events in Q1. Usage has doubled in the past 4 months through the end of March and is now 4x over the past 12 months. Across the services, the combatant commands, the joint staff, and the intelligence community. When the stakes are highest, when failure is measured in lives and readiness, this is where we are uniquely positioned. On the factory floor side, the demand on the defense industrial base to ramp production and sustainment has been so acute that we have surged resources from our commercial business. This is exactly what Warp Speed was built for, modernized American manufacturing. And we're doing just that where it counts the most. AIP is the default builder platform in the Department of War, with thousands of developers using AIFD, migrating legacy systems, standing up new capabilities, solving problems that used to require contractor teams and months of lead time. Our software is becoming the most malleable and responsive weapon system for the Joint Force. Finally, what's now clear is that Mythos and Spud, and even other current generation models with AIP, are capable of finding novel vulnerabilities in complex cyber kill chains. They have discovered thousands of 0 days in major operating systems and browsers. This is the Spudnik moment in the AI arms race. The rate of vulnerability identification is about to skyrocket. Finding the bugs is no longer the limiting factor. Rapid fire remediation with exact precision, immediacy, and absolute certainty is the new hard problem. Knowing exactly what versions of what software are running where and closing the remediation chain autonomously. Apollo was built for exactly this. We're shipping the next generation of Apollo as we help our customers reposture for this world. And note the Jevons paradox dynamic here too. More AI means more code. More code means more slop. More slop means more attack surface. More attack surface means more vulnerabilities. And more vulnerabilities means more Apollo. I'll turn it over to Dave.
Thanks, Sean. We had an outstanding first quarter, delivering our strongest ever Q1 sequential growth rate of 16% and our highest ever reported year-over-year growth rate of 85%. Our revenue growth rate accelerated for the 11th consecutive quarter, highlighting the durability of the growth of our business at scale. We expanded our Rule of 40 score by 18 points quarter over quarter from 127 in Q4 to 145 in Q1. Our U.S. business achieved triple-digit growth for the first time, driven by accelerating demand for our AI platform. Revenue in our U.S. business grew 104% year over year and 19% sequentially in the first quarter. Our U.S. commercial business grew 133% year over year and 18% sequentially, and our U.S. government business grew 84% year over year and 21% sequentially. On the back of this continued strength in the U.S., we are raising our full year 2026 revenue guidance midpoint to $7.656 billion, representing 71% growth year over year, a 10-point increase over our full year 2026 revenue guidance from last quarter, and our largest ever full year revenue guidance raise. Turning to our global top line results. First quarter revenue grew 85% year over year and 16% sequentially to $1.633 billion. First quarter U.S. revenue grew 104% year over year and 19% sequentially to $1.282 billion. Customer count grew 31% year over year and 6% sequentially to 1,007 customers. Revenue from our largest customers continues to expand. First quarter trailing 12-month revenue from our top 20 customers increased 55% year over year to $108 million per customer. Now moving to our commercial segment. First quarter commercial revenue grew 95% year over year and 14% sequentially to $774 million. We closed $1.3 billion in commercial TCV bookings in the first quarter, representing 42% growth year over year. Our AI platform dominates the U.S. markets as the only real choice for deploying AI models operationally in a way that actually works. First quarter U.S. commercial revenue grew 133% year over year and 18% sequentially to $595 million. This exceptional growth even understates our U.S. commercial momentum. As Ryan noted, we had a successful U.S. commercial customer program transition to a U.S. government customer. Absent this transition, U.S. commercial growth would have been 143% year over year and 22% sequentially. In Q1, we closed our third consecutive quarter of over $1 billion in U.S. commercial TCV bookings at $1.2 billion, representing growth of 45% year over year. Over the past 12 months, we closed $4.7 billion of U.S. commercial TCV bookings, a 115% increase from the prior 12 months, highlighting the accelerating demand for AI that creates real operational value. Total remaining deal value in our U.S. commercial business grew 112% year over year and 12% sequentially. Our U.S. commercial customer count grew to 615 customers, reflecting growth of 42% year over year and 8% sequentially. First quarter international commercial revenue grew 26% year over year and 5% sequentially to $179 million. Revenue from strategic commercial contracts was $3 million for the quarter, representing 0.2% of overall revenue. We expect revenue from these contracts to be less than $500,000 in each remaining quarter of this year. Shifting to our government segment. First quarter government revenue grew 76% year over year and 18% sequentially to $858 million. First quarter U.S. government revenue grew 84% year over year and 21% sequentially to $687 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for our AI platform in government. First quarter international government revenue grew 51% year over year and 7% sequentially to $172 million. We closed $2.4 billion of TCV bookings, up 61% year over year. On a dollar-weighted duration basis, TCV bookings grew 135% year over year. Net dollar retention was 150%, an increase of 1,100 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q1 of last year as load-bearing institutions continue to turn to Palantir's battle-tested AI platform. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the first quarter with $11.8 billion in total remaining deal value, an increase of 98% year over year and 6% sequentially, and $4.5 billion in remaining performance obligations, an increase of 134% year over year and 9% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 88% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $984 million in the quarter, representing an adjusted operating margin of 60%. Q1 adjusted expense was $649 million, up 7% sequentially and 32% year over year, primarily driven by the continued investment in our AI platform and technical hiring. We continue to expect expenses to ramp in 2026 as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. GAAP net income was $871 million, representing a 53% margin. First quarter stock-based compensation expense was $202 million, and equity-related employer payroll tax expense was $28 million. First quarter GAAP earnings per share was 34 cents. First quarter adjusted earnings per share was 33 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 145% in the first quarter, an 18-point increase to our Rule of 40 score from the prior quarter, and our 11th consecutive quarter of an expanding Rule of 40 score. With our 2026 revenue and adjusted operating income guidance, we are guiding to a Rule of 40 score of 129% for the full year. Turning to our cash flow. In the first quarter, we generated $899 million in cash from operations and $925 million in adjusted free cash flow, representing margins of 55% and 57%, respectively. We ended the quarter with $8 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q2 2026, we expect revenue of between $1.797 and $1.801 billion, and adjusted income from operations of between $1.063 and $1.067 billion. For full year 2026, we are raising our revenue guidance to between $7.650 and $7.662 billion. We are raising our U.S. commercial revenue guidance to an excess of $3.224 billion, representing a growth rate of at least 120%. We are raising our adjusted income from operations guidance to between $4.440 and $4.452 billion. We are raising our adjusted free cash flow guidance to between $4.2 and $4.4 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Well, welcome to yet another exciting earnings call. with these numbers, the ones that leap out to everyone are the over 100% growth in the U.S., the rule of 145, the 85% growth in the U.S., and guiding to 71%. And just the underlying dynamics of that, you would think that the most interesting thing is just the truly N of one nature of these numbers. And in fact, it is pretty fascinating, especially people who've doubted that we get this far. But I think the most important thing about our earnings is it establishes beyond a doubt that while over the history of Palantir, we focused on things that actually transform the world. And the current environment is actually being transformed by the Palantir platform. And although there's a wide view out there in the world that AI slop is going to take over the world, our clients, especially everlasting primordial infrastructure industries, know this is not the case. They buy our product despite the fact we have 70 salespeople. A normal company of our size would have 7,000. Only 7 of our salespeople actually even really sell. We are doing what a normal company would do with 7,000 salespeople with 7 people. We're doubling the U.S. We are dominating on the battlefield. Shyam will talk about this later, but the way opposed and in contradistinction to both allies and friends and enemies is being done in our platform from beginning to end across the U.S. The reality that we will be able to drive 100% growth in the U.S. is being driven by the fact that our customers either know or will know that you need actual results. Those results require granularity, specificity, actual relationship to facts. The appearance of software working is not software working. And the slop that is getting a lot of attention is not only dangerous in terms of the hyperbolic rhetoric that it also, like, there will be no jobs because of the slop, that nothing will work. We will have a godlike figure in the name of AI, when in fact, what actually does work is a platform built by a motley crew of highly technical people who over 20 years have been maligned for being right about the nature of having to build Foundry, the nature of having to build Apollo, the nature of an FDE, and the demand for this is once in a lifetime. And that demand is actually driving these financials, meaning growing 71% goal for the year. What did we miss? Okay. Any case, I hope you guys got that.
Secret.
Wow, this is like being on stage. Yes. So with that, maybe we'll go to questions. But the unique way in which this company is being run, the unique way in which the way we built the products, the unique way in which we're willing to be non-mimetic. When the whole world said software had to be worthless, we built platforms that worked. When the whole world said you could not extend it with FDEs, we went and built FDEs. When the whole world is saying AI slop without an ontology that allows you to put true statements and truths into the ontology and therefore produce actual results, we stuck to our guns. And what did we get? We got these results. And I think if you just look at the results, how can a company grow 100% in the US with functionally a non-existent sales force with the same number of people? Our free cash flow this quarter is larger than our revenue a year ago in the same quarter. Think about that. Same company, same people, extenuated products, it's all being extended. And then look at the impact on the battlefield in the Middle East, on every government institution, on demand of our product, and in US commercial. This is all the result of being right about product, right about execution, and standing in the headwinds of people who are certain they're right. Now the new version is AI slop, and proving that they're wrong with our results. This is an incredible quarter, and I'm very proud of this.
We received a question from Aiden G, who asked,
Well, thanks, Aiden, for the question. Well, it's a massive tailwind for us because we've always been counter-positioned against this sort of legacy thin software, that kind of was built by and executes a playbook that's built around rent extraction and no outcome delivery. We, on the other hand, have been focused entirely on building software that's focused on alpha, not beta. We're not trying to make you the same as every other person. We're trying to figure out what makes you different. How do we express your business strategy through the software platforms and products we build? So that part is probably obvious, that counter positioning. But the other counter positioning is against AI slop. We are focused on enterprise autonomy, not on dazzling demos. We have in the ontology the no slop zone. The ontology is the body to the AI brain. So you can't actually interact with the enterprise or affect the world. Your agents can go nowhere without ontology. And you're seeing that with our customers. In government, we are the platform that you build applications and agents on. In the commercial world, people are replacing legacy software at a lightning fast pace, as I mentioned in my remarks. And we see that even internally at Palantir, where we've gotten rid of legacy software like CRM, built it very quickly on top of our platform to a user experience that our users love.
Almost every single highlighted example of AI that actually is producing results in the US is actually Palantired by Palantir. And one of the ways to pen test what we're saying is just dig into the examples of AI actually transforming an enterprise. Call the client, talk to them. I'm not saying every single one is, but almost every single one is. And it is because the theory of how you do AI and the practice in the enterprise are just radically different. And they look the same to non-technical people, but they do not look the same to practitioners, whether you're on the battlefield or whether you're an insurance company or whether you're a hospital or whether you're a manufacturer. What they discover is the reality of doing this requires a platform like Ontology and currently executed on top of Foundry with FDEs. And currently that combination is available from one company, and that is us.
Thank you. Please. Our next question is from Dan with Wedbush. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Yeah, thank you. Well, great quarter yet again. My question is, how do you balance between going after government deals and then commercial deals? Because obviously, you're in a unique position, just like we saw with that deal this quarter. Can you talk about that balance? Because obviously there's more demand than supply in terms of relative, in terms of Palantir. Thanks.
Maybe we'll talk to Ryan. So the reality of how Palantir works is we position and prioritize the U.S. warfighters over everything else. And when we believe or know because of our proximity that the U.S. warfighter is in danger, we put the whole company against it. And it is not always the way in which one should do this, but it is how we do it. And we've done this from the beginning and we're doing it now. And so in the current context, we take opportunities that look the same from a business perspective. And we 100% prioritize this nation's security over any other variable. Now, that also interestingly gives us leverage because we go to the government and and one thing people don't believe is we're like, look, this doesn't work the way you think, or this kind of execution will not lead to success. And you are actually asking us to take money out of our pocket to do it, which we will do. But we cannot sign up to do something that won't work, that will not advance the warfighter, that will not advance munitions, that will not help this country have better unit economics, while just hurting or deprioritizing another client. By the way, we tell commercial clients this. I tell commercial clients this all the time. We are highly monogamous in our in the way we work. We are not trying to make you into a commodity. The only thing we will put above you is the U.S. national security. And by the way, we're more than willing to do this when it is unpopular or when it's popular. And that's, if you look at the retention and the full alignment inside Palantir, the benefit of this is we just attract and retain people that understand there's a higher value than just running the business as a business. That said, our biggest problem currently is demand in the U.S. I believe we will have 100% growth in the U.S. Is that we just cannot meet demand. And again, the advantage here is we can go to commercial and government clients and say, look, this doesn't make sense. If you want slop, you can go here. If you want old school software that actually doesn't work and probably will disappear, there are a lot of names. If you want us, we need to do it in a way that will make sense. And that gives us a lot of leverage. But we're very upfront with people. We're just like with our customers and just like we are internally. And we're also doing this abroad. You know, one of the reasons why we're intolerant of software and AI or some kind of witchcraft dance that you have in some parts of continental Europe is we have no time for it. We literally have no time or no energy for the waste of time machine. Probably I should be on TV explaining to people why the models are actually only useful on a platform, why the use cases platform companies are talking about are actually in Palantir, why the cost and token reduction in token price is exactly what we predicted, why our clients actually are asking, can I have a cheaper model since they seem pretty similar? But we also don't have a lot of time for that. Would you like to add to this now that we're on the mic?
I'll just say what we're seeing across our customers, and this is what's driving the US generally, is those that understand the load-bearing context. In order to apply AI in that context, you need to be able to deploy it with precision, without slop. And you see like the AIG CEO talking about the agentic underwriting and claims process that's being coordinated through the ontology. These are all really massive undertakings. We're going deep with our customers and we're having that level of impact. And that's what really is driving us.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and you'll receive a prompt to unmute your line.
Good afternoon, everyone. Hope you can hear me. And I don't know if you're going to be able to see me. But I'm going to start off as a follow-up. I'm going to do 3 questions today. Number 1, when AI started, you guys, you have some customers that wanted to do it their way. And what's happening right now with the AI labs getting into enterprises? Like how many customers understand that value? Or how many are the niche customers that like understand it and are actually advancing faster? But you also have some that are still like just, I don't know, trying with just Anthropic, Gemini, like OpenAI. They all have enterprise solutions now. Alex, you mentioned talent. How easy or hard is actually to get the right engineers to keep being able to incorporate all that to the outcomes that you are looking for? And the second one on defense, because it's where my heart is always, you got a good call out on Maven in the presidential budget request. Maven is one of the 2 pillars for JADC2. Titan is moving to production, and that is amazing news, but this is an election year. How much of that growth depends on that budget being appropriated, and how much you can actually keep growing if we were to see an extended continuing resolution?
Well, the talent question is Palantir is famous for having the best talent over a very long period of time. Look, it's a super competitive environment. I think the whole world wants to either work a Palantir or a lab. The advantage that we have at Palantir is if you come to Palantir, you learn how to build something that is truly unique. And quite frankly, if you want to leave Palantir, you can have any job in the world. And so I think that talent race is going to continue. The thing about being a Palantir is it's a very high pressure, very unique environment where we need people who are willing to do things that are different than anyone else, and where, although we're 9/10 of the world loves us, 1/10 of the world professionally hates us. So someone on your social graph is definitely going to call you up and say, how can you do all this important work in Israel or the Department of War or other places, even though we've powered every administration basically since in existence, not at the scale, obviously. So that's an ongoing thing. I am pretty confident that we will continue to attract and retain some of the best talent in the world. And we're seeing a ramp up in that. I am now personally sitting across recruiting. I'm particularly interested in neurodivergent people of all kind, people who are neurodivergent enough that they get up and come to this country and do important, valuable work. And we see a lot of, and so like we find a lot of our allies have chosen to come to America and chosen to come to Palantir. We like that. But it is an ongoing battle. There really are a couple options in the world that make sense. Palantir is obviously one of them, and we're very, very unique. I would also say the more we produce these numbers and the more we have actual experience on the battlefield and an enterprise, one of the things we're going to do an increasingly frontal job of doing is you can join this startup that probably is not going anywhere. Everyone kind of on the inside knows venture is kind of not doing well. Or you could come to Palantir. But it is an ongoing, everyday battle. Everybody wants a Palantirian. When we started this, a couple of years ago, I was saying Palantir is the most important degree in the world. The problem for us is it is the most important degree in the world, and everyone knows it now. Thanks also because we got fair coverage and because, we probably are, because of our domination here, somewhat undervalued, but people know that we actually are changing the world and we're probably somewhat undervalued. So it's a great place to go. On the defense side, I'll leave it to Sham to talk now that we're doing our,
Yeah, on the defense side, it's been a very active period. It's not just Maven and Titan. There's also the work that we're doing on production across major weapon systems for the department, work around the Sputnik moment right now. So there's a lot going on that one should be pretty excited about. The department's pulling as much of that into 26 as possible. History would suggest, of course, we're going to be in a CR because we've, like most time and since Palantir's existed, there's always been a CR. So there are certain things that are outside of our control, but I feel very good that the role we're playing, the stakes are very high. What we're providing is existential to actually moving the department forward, and we'll realize that value. On the AI lab side, the enterprise side here, I think one of the privileged positions we live in is at the limits of what the models can do. I think one of the challenges for the labs is that all they see are the limitless potential, as opposed to living at the edge of where does it translate into economic value. And you see that when I wish everyone the best with building out deploy code, but it's essentially how do I take Palantir and try to replicate that? What we do is very unique based on how we've organized ourselves and the tension between FDE and product development. We have these out-of-body experiences. There's at least 2 labs we can think about where they were talking about 2 different customers that they're working with and how it's transformed X or Y. Yeah, it did in AIP. We did that. So I
just add to that point, the best thing that can happen to this country, to this company, and maybe this country is, of course, they should go out and flirt with all this slop. Mostly they come home to Palantir. They don't have to all come home to Palantir. We have limits. But go test it out. Go see how easy it. I mean, they're creating the market for us. We saw the same. Easy it is to make these things work. Great. And then compare what you're delivering to what we've delivered. And you know what? My version is we don't have to have all the market. We can only we are at our limit doing 100% this year, which I am going to drive the company to, and maybe we can do 100% next year in the US. That's all we can do, and they can just expose the market to their beautiful, shiny appearances. And we'll just expose the market to how we will transform your enterprise. That's how it's going to go down. And by the way, I'm always telling people inside the company, everybody wants to be you. You just may not know it. They're all trying to do Polyco, Stoico, this co. It's because in the end of the day, they need to have growth with profit. But you can't have profit if you're not changing the dynamics of the partner you work with, meaning your customer. It is downstream from the value you create. And that's how Palantir is. We're very comfortable in that zone. Now, I do think this is we're going to end up with a different term for software. You can't lump what we're doing. We're really providing infrastructure and the installation of AI infrastructure. Look, if your company is largely running around and offering steak dinners with something that someone can, hack and rebuild in a week, yes, you're going to have a huge problem. That don't make sense. They're under huge pressure. And that's one of the reasons we're at the forefront. I mean, can you believe we're at the forefront of almost every discussion in the world? And it's simply because we're powering almost everything that works. Not everything. There's some other great companies out there. Many of them are not well known, and we should help publicize them. But that's where we're at, and that's what these numbers show. You don't have to believe us. Believe your non-lying eyes.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Well, to individual investors and Palantirians who are also individual investors, being on the front line of important things is painful. You get yelled at occasionally. Many of the people yelling at you have no clue what they're saying. Some of the people do have a clue what they're saying and just disagree with the West being strong and more efficient and more moral and having better unit economics, or quite frankly, are value your support and we value your defense of us. We are defending you every day. And that's in great part what drives these results. And we are having some fun doing it too, just so you know. And hopefully you'll have some fun. Thank you for your support, and we will see you next quarter.
Thank you. That concludes Q&A for today's call.
I just want to say, the jokes in the chat, the fact that this will be immortalized as one of those quarters. The microphone doesn't have any tokens. Guys, let Carp keep cursing. Why do we have to mute him every time he says the F word? I mean, there's some pretty...
The most expensive drop mic.
The most things that mic was worth $3 billion once they had to replace it. You had our buddy Chad right here. When earnings are so baller, you need 3 mics to capture all the heat. Let's just address that real quick, because obviously that's the elephant in the room. Look, my take on this is very simple. First of all, almost no companies besides Palantir and Robinhood even do a earnings video call. So they are already trying to go out of their way to make earnings a better experience for people. There are technical difficulties that happen. Now, look, I would imagine if I'm Carp right now, this is absolutely unacceptable and someone legit might be getting fired. But also it is what it is. Like, I mean, what are you going to do? Things happen. And I think we got the gist of what Palantir was trying to say. Was it a good look? No, but it happens. I wouldn't attribute anything to the earnings or the quality of the earnings or to the stock price on the mic not being the best. But I don't think it's that big of a deal. Arnie?
I mean, the mic seems to be the only real issue of
Amir, any thoughts on that before we get into it?
Carp just keeps giving us the golden quote, go out and flirt with slop if you want. You'll come back to Palantir. But you heard it here first, folks. Carp said, AI slop is not going to take over the world, so stop selling off my stocks, please. But there is one issue I had with this call, if we're being serious. And we've been hearing this, quarter after quarter, and that is, it's a nice problem to have, but we cannot meet demand. We can only meet demand to grow 100% in the US this year, maybe 100% next year. But we've been saying this, that they have more inbound than they can handle, but they're not really addressing how they will, start to meet that demand. And I think shareholders want to know that, like, okay, you have all this demand, you refuse to hire people. Why don't you, ensure that you can meet the demand? Because, that's probably what the street wants to hear. What I want to know, how will you, grow into meeting that demand? To have even more exceptional numbers. I mean, the numbers already, they are amazing, fantastic. That doesn't really take away from that, but it kind of makes you wonder, like, okay, if it's a new problem, like, okay, we can't meet demand right now, I would understand that. But we've been hearing this for many quarters now, and they're not really addressing. They're more like bragging, like, we can't meet demand, but okay, what will you do in the future to start to meet that demand? And I think that's what a lot of shareholders would be interested in. Apart from that, nothing really to say. I mean, fantastic quarter, fantastic numbers, fantastic guidance. Everything's amazing, except both me and the Carp having mic issues,
Yeah, everyone said it's your fault for the mic.
but that's really the one thing. I'm curious. Oh, Chad, give me AIP access already. But I'm curious about your thoughts on that remark, about me meeting the man thing, because I think that's a pretty big deal. Personally, I'm not worried. I think the stock is very, very undervalued. Don't start calling me a bear, but I have to bring it up. I mean, it's a valid point, I think.
Yeah, my quick thoughts on that are, I think the reason they are not hiring that many people, outside of the fact that they are incredibly effective with a small amount of people, is because there's a very important culture that they're trying to maintain. And so if they were to hire, 1,000 salespeople and then grow, instead of 70%, 120%, yeah, it would be a lot of growth, but would it sacrifice the sanctity of their margins and their operating leverage, et cetera? So to me, I am very happy with this growth. I don't think anyone can be not happy with this growth. To your point, how do they continue handling the demand? I guess from their perspective, they would say that if we continue to deliver value, that demand should be endless, which means, the 7 people that Karp said that are doing the work of 7,000 people will allow that to continue accelerating. But, it would be a question if they were like 30%, 40%. The fact that they're at 70 to me, or 85, I should say, is like, okay, it is what it is. Like, I know they're going to keep growing, and so I'm not that concerned about them capturing that extra 15% they could have got. But if that 15% wrecked their margins or wrecked their culture, the trade-off probably would be too high.
Yeah, and it also gives you a new dynamic, which we didn't discuss, which is pricing power. When you have so many people knocking on the door, that's really when you can start to, increase prices. And if we look at average revenue per customer, excluding the top 20, which, almost account for half the revenue, it's actually back to 2021 levels, which is, amazing. Increasing that number, that's been accelerating for 4 quarters in a row now. They're up to 3.1 million average revenue per customer on a trailing 12-month basis. That's amazing. Like, I don't think people are talking about that, but they've been able to accelerate that. And that's likely because they have this pricing power, because, everyone is knocking on the door. So it gives you, some positives as well. I mean, they're growing incredibly fast. So I'm not knocking them, but I'm saying, like, when they keep mentioning it, it would have been nice to be like, okay, here's what we're going to do about it in the future. But, it has, some positives as well in terms of pricing power.
Look, it seems contradictory, because on one side you have Karp saying, we can't meet the demand. And then on the other side, you look at the company and you have 6 billion there in the cash. And Karp keeps saying, we essentially have no salespeople. We have 60 people, while a company of this size probably have 6,000. It's like, okay, so why don't you hire? And I think the answer lays back into an old clip that I shared you in the private chat. Can you put it, please?
Pull it up. Yeah, I'll play this right here.
How do we take the business and move it from here to here in a very short period of time? Take the timelines, cut them in half, or divide them by 5. You want transformation goals that fail, but at a high level. So it's like, oh, you need 2 years to do this? Great. I want to see it done in 2 months. This will surface all the problems. One of the reasons special operators are special operators is because the timelines are tight, the budgets are actually thinner. Special operations communities operate with less money and less time and more constraints. And then compare the output to everyone else. How do we...
So this makes me think of Palantir trying to disrupt itself essentially every quarter, every year. They set some guidelines, very ambitious, and they need to deliver. They're used to this need to deliver to impossible missions on every kind of mission. And once you are under those constraints and you have brilliant people, guess what? These brilliant people are able to find sharper and sharper solutions. In the case of Palantir, they said, we want to double the size of our business, but we don't want to double the size of our business just hiring more salespeople. That would be the easy answer. Can you actually double the size of your business by having a huge constraint like we don't hire more people? If you have that constraint, you are forced to become better. You are forced to become actually 10x better at deploying the resources you have. So AAP, for instance, that Chad mentioned, is, in my opinion, the key to make these 4,000 people actually worth like 40,000. And then there is a second piece of the puzzle that I think we are not paying that much attention, but I think the more we go further, it will have more weight. Now we are always thinking of Palantir as the company that sells. But what we are seeing right now is Palantir not really willing to deploy more resources into hiring more people, especially sales. If they want to only have so few sales, it means that Palantir just wants to focus on the products, having few few FDs that actually go to companies, probably dealing with the highest customers in terms of like customer ranking for why they could be strategical. But then for all the others, Palantir doesn't want to deal with everybody. Palantir wants others to deal with these companies. So what we have been seeing in these recent years, and now I think they start to get more noticeable, are these Palantir consultancies called Palantir Ecosystem Partner, something like that, that now are scaling. And for instance, at the beginning of the year, North Slope raised 22 million. So it means that the valuation is probably 10x that, something like that. But the important thing is this company that are consultancies and typically don't raise capital. They see so much demand into, we need to hire many more people to solve these issues, that even a consultancy raises capital, and actually lots of capital, because the demand in there, and Palantir itself wants this demand to be executed by these guys.
Yeah, I agree. It seems like they're getting ready to sell the platform without personally selling it. North Slope, I actually interviewed the head of that firm. I mean, I talked to him a couple of years ago. They were in the process of raising seed capital or Series A capital to be able to expand the business. But their business helps other companies implement Palantir software, because Bill, the founder of the fund, or the founder of the company, he used to work at Palantir, so he knows how to implement it. So the fact that you have all of the, for AWS and Azure and GCP, there's thousands of these companies that try to help you implement the software into the organization. The fact that that is starting to happen for Palantir, and there's all this inbound, and again, only 1,000 customers, probably makes you believe that even if they're not spending the money to hire salespeople, they are finding other ways to get that growth at scale. Stock not really getting a major reaction, 1.2% down. Quite frankly, I am okay with it only being down 1.2%. This quarter has been pretty ruthless for software companies that barely met their numbers, if not beat their numbers. Palantir demolished their numbers, and the fact that it's down 1%, I think that's a testament to how the market is thinking of software right now. If you're not producing something in the AI semiconductor ecosystem, it's a bit tough to get a bid on your stock. We'll see what happens tomorrow when the market opens, but I do think the lower this falls, if it does get taken down, you're going to have a lot more people saying, if they're going to grow 100% next year, I'm buying the dip.
Mm-hmm.
Yeah. Sorry, Ernie, were you going to say something?
No, go ahead.
More question. How does this relate to all the earnings that you have been seeing recently? In terms of, in terms of strengths, hard.
This is the best one.
But in terms of reaction?
Well, the best one in terms of reaction was Intel, because they beat by 3,000%, and no one expected the CPU shortage to be that massive. But in terms of expectations that were already high, like exist for Palantir, this was the best one in terms of demolishing the guide in the print. Amir?
And I was going to say, we got a pretty big confirmation. I think we already knew this, but I think some people had a lot of, if we go to Mariana's question on, how will the election year potentially impact the budget? Like, are you worried? She mentioned, Maven and Titan. And then Sean was like, you're forgetting that production is very important as well, which means like warp speed. So we all knew that, the U.S. Department of War is really pushing the primes to produce more. Like, we need more output. Like, you can't, continue be lazy and cash in like on these contracts. Like, no, we need you now. We need you to increase output. So Xi'an basically more or less confirmed that, yeah, warp speed is being, a big factor here as well in the government space, which is important. And then they also said that, they're moving the whole Department of War forward. So they're not really worried about the election year or like the budget, because likely the government realized that they're getting their money's worth the most with Palantir. So there's no reason like to have any fear about, Palantir losing out on some, contracts due to budget constraint. Like, no, it's probably going to be concentrated in companies like Palantir that are delivering the most for the amount of money that they're being allocated. And there was another thing that I wanted to say. I'll maybe remember it later.
I probably know what it is. What is the company that surely didn't like this earnings call?
I know the answer, Amir. You want to go for it?
I'm trying to think, is this some deep question or is it a layup?
It was mentioned more than one time.
Which one's Salesforce? And how they are taking Palantir's business in the government? What was Mark Benioff saying? I can keep track. Do you mean Salesforce?
No, essentially, both Sham and Karp mentioned, the CRM, we replaced the CRM we were using in 1-2 weeks. And Karp reiterated that look, if we could actually rebuild your CRM in a week, like, what's the moat?
It's a fair point, and I think if a lot more companies are going to start to wonder that, then obviously there will be a lot of appetite for inbound demand coming for Palantir. They kept mentioning slop a lot as well. I think that was something they tried to get across, which is that a lot of the AI products that are out there, and I don't think they mean slop in terms of like AI images. I think they mean slop in terms of actual infrastructure in the enterprise just doesn't produce results, which ends up becoming slop that you feed into a model that you think is giving results, whereas Palantir's version of deploying AI, implementing it with the ontology, is what actually drives business value, which is why they're getting the margins that they're getting. So I think that was an important part of the call as well. All right. That is it for us. Thank you, everybody, for joining. Deeply appreciate it. Unfortunately, yes, I know we all wanted the stock to move. It is what it is. We'll see tomorrow when the market opens how the street chooses to price this based on those numbers. I think if you don't care just about the stock, you care more so about the core business. If you're long-term, the business executed at a level that I don't think we've ever seen before. Arnie, Amir, any final thoughts?
I was thinking maybe it deserves a little bit of mention, that sentence that Sham said about, we are in a Sputnik moment in terms of AI race. Have you captured that?
We didn't talk about it. If you want to say anything about it, go ahead.
No, it's something I'm trying to understand better. I don't pretend to know exactly, but I know Sputnik was the satellite that was sent by Russia that triggered an immense reaction on the US, because that is where triggered of, we can't be behind, and that pushed towards the US being obsessive toward, we need to dominate this space. We need to set the NASA, we need to set DARPA, we can't be behind.
Yeah, basically saying it's an existential moment right now for AI. I mean, that was the takeaway, and it looks like he is right on that. Amir?
Yeah, I also had to Google what Sputnik moment was during the Cold War. No shame in it. I just wanted to highlight another, sentence that Karp said, which, I mean, it's easy to forget when you're getting these banger quarters, but he said, we had more adjusted free cash flow this quarter than we had revenue a year ago. Yeah. And I think people who are, too focused on, what's the PE for Palantir currently? I think you really forget how quickly this company is growing and how quickly, they are contracting those multiples. So if you really care about pricing multiples, that sentence should make you, wake up a bit, because I think they will quickly grow into that, especially given what they've been saying now. And we know that they always beat guidance. So 100% next year, you can probably expect more. And, with the margins that they're having, with the margin expansion, that P is going to be looking very cheap, in a few quarters here, is what I think.
Agreed. Thank you, everybody, for being here. We'll be back next quarter. I'm sure all three of us will have thoughts, videos, podcasts, articles, all that stuff over the coming days.
I think we should also say hello to all the haters in the chat, because clearly there are more people welcoming us than other times.
Yeah, I mean, look, Palantir has grown as a company. It has a lot of people that it's not 2022 anymore, where there's 1,000 of us that are following this name at $6. So it's a different world. But I think the people that are purely saying this company is not able to justify its existence in terms of its growth potential, this was a quarter where it's really tough to continue making that argument. There you go. Thank you, everybody. Appreciate it. We'll be back tomorrow. And we'll talk about this tomorrow in the market open as well. Thank you, everybody. Have a good one.
Bye-bye.
Bye.